Standard Chartered Bank is reportedly closing about half of its Nigerian branches as it moves to expand its digital banking footprint. People familiar with the matter stated that the international bank took the decision as the finance industry comes under pressure from mobile money providers. A document seen by Bloomberg News suggests the London-listed lender's local unit already started to shut some offices in December and would eventually operate only 13 branches in the West African nation, down from about 25 previously. Joining us to discuss further is Arise Business Analyst Chika Mbonu. Chika, good morning to you. Thank you so much for joining us.
How are you today?
Fine, sir. Thank you for joining us. So shall we start with this Standard Chartered Bank report? What do you make of it, Chika?
It's an interesting thing, because there was a time that you can't mention a bank without mentioning branches.
Right.
In a bank that doesn't have branches is not really a bank.
Right.
But a lot of things have moved on since then. And so worldwide, it seems that, with the onset of digital banking and a lot of fintechs, that the bank branches are the endangered species.
Yeah.
But that's where, it ends. Again, a lot of work has gone around the world to show that despite the onset or the expansion of digital banking, a lot of communities still need bank branches.
Like rural communities.
Yeah, even the commercial centers, because they help in branding the banks. People like the physical presence, knowing that the bank exists, not just on the phone like this. Where's my money? They want to see the brick and mortar.
Yeah.
Bring it home, domesticating that in Nigeria. Also, there was a time that, some banks, if they are neighbors, you better start preparing to leave your house, because they're going to almost take over your own existing properties.
Right.
But you notice that in the last 2-3 years, the frequency of branch opening has reduced for most of the banks. Now, on the streets, commercial banking franchise in Nigeria, for example, maybe return on investment is about 5%. So you notice that a lot of banks were offered at the time from universal banking. A lot of banks were offered standalone banking or holding banking concept.
Yep.
And a lot of them went to choose about two or three chose the holding banking concept, and a lot of other ones chose single banking concept and sold their subsidiaries.
Right.
What's funny now is that they are going back to that and acquiring all the subsidiaries they sold, because of the fact that the margins are thinning out in the core banking, and they need to couple up income from other aggregates of the banking spectrum, and that's what's happening. So the major drive for banks, therefore, is what? Cost to income ratio. A lot of research has gone there and said that it's a transaction that is pushed through a bank, a branch bank, brick and mortar, and through the digital channel, costs more, about 20 to 40 times more, through the physical branch than the digital channel. So the banks in Nigeria, for example, are pushing a lot of transactions through the digital channels, and that's what's happening. And so instead of the physical branches that are holding, Nigeria has pushed through the agency banking, what Nigerians call the POS.
Okay.
But see, the bigger picture for us also is that we're pushing financial inclusion in Nigeria.
Yes.
And so, despite the onset of fintechs and digital banking, abroad, the response, even though, again, I know in the U.S. also you can't just do anything, the response to a lot of banks abroad is what? Shut down branches. As they gravitating a lot of customers towards the digital channels. As that is happening in Nigeria also, you will find that it's not as simple as that.
Right.
In Nigeria and some other geographies, before you can open a branch, you need to get a central bank approval. Right. Therefore, also, before you can shut a branch, you need to get a central bank approval.
Right.
Against the admixture of the fact that in Nigeria we're pushing financial inclusion.
Right. And
the first weapon in the armory for financial inclusion is what? The branch networks.
So bringing more people.
But bring more people into the So having been opened, it is difficult to close it. So I'll be surprised if a bank can just wake up and say, I want to shut down our branches. They must get CBN approval to do that.
Okay.
And I think that the banks will find it difficult to get CBN approval.
Wow.
Especially when we're still struggling with about 60% financial inclusion.
Right.
And CBN pushing for, bringing more people into the financial net. And even though banks now are using more of the agent banking to push out the frontiers of banking out of the call centers, so it will be difficult for a bank, Glen Stanchart, to just wake up and say they're going to close branches. That will be a difficult thing for them to do. I'm hoping and waiting and seeing how how this will play out.
Thank you for that, Chika. I want to get your thoughts on the IMF advising emerging markets to possibly raise rates.
The last 2 years, 2020, 2021, has been beset with the coronavirus challenges. And the economies of the world, central banks of the world, what did they do? Drop interest rates and push money into the systems and to reflect the economies, drive output. In other economies, a lot of money checks were put into people's hands.
Yep.
So what's happening is that as the coronavirus impacts are moderating, you have the high inflationary environment around the whole world.
Yes.
And every geography in the world now is talking about inflation.
Right.
Not just in Nigeria, everywhere, whether it's the UK, whether it's the US. In the UK, I said for the last decade, the kind of inflation they have, they've not had it in 1 decade. And so all the central bank governors are chasing inflation. And what they're going to do is that to raise interest rates. So when they raise interest rates, it means the available dollar, pounds, yen is reduced, and for the economies. And then, but what happens is that also when they raise interest rates, those who have investable funds can actually keep it in their geographies.
Right. And
before the opportunity cost, the opportunities of bringing money into our system here, where the rates are higher, is limited.
Right. Okay.
Because now they have, before the rates there were very low.
Right.
And so the money can move from there to our third world or developing economies. But the rates there are raised now to manage inflation, to drive inflation down.
Yes.
There will be reverse movement of investable funds. And that's what's going to happen. And so when the dollars move from here, what will happen? So they said the economy should prepare for what? That movement, by depreciating their currencies.
Right.
Because the quantum of dollar available to chase the naira that we have will be less. And so to prepare for it, you need to depreciate. But the proviso there is that, as usually IMF, there's no one remedy fits all.
Right.
It should make sure that it fits the economy. For us here, depreciating our currency ordinarily in economies tells you that exports become cheaper. Spending money in the economy becomes cheaper. Tourists can come in. We're a monoproduct economy.
Right.
And so if we depreciate that currency, it doesn't affect the oil price or the amount of oil you're going to sell.
Right.
And so it's going to hurt the economy even more. But you see, look at what we're facing here. We've been driving output to get out of recession. And as I keep saying here, economies like one solution you're using can be curing one sickness and causing another sickness.
Right.
So we're driving output. Output means you're pushing out more naira into the system. The sustainability fund of almost $1 trillion the CBN put out. What that does is what? Pushing up too much naira into the system, drive inflation up. But again, the other tools are working to push inflation down in the economy. And so that's what IMF is saying. Get ready for that. When there be reversals of movement of funds from here to the first world, because interest rates are rising to manage inflation down in those economies, and which means the quantum of naira or cedis available is not limited versus the dollar that's in the quantum in the economy.
Monetary policy strategy from Chika Mbonu, as also retail banking strategy as well. Arise Business Analyst Chika Mbonu. Chika, always a pleasure. Thank you so much for joining us.
Thanks a lot.